this morning, if we look at the markets, apart from in Europe, really, we've got the AI story dominating the geopolitical worries. Is that how it should be? Are you worried about chip stocks? Do we need to be careful about chip stocks?
We should need to be careful about chip stocks, but at the same time, I completely understand what's going on. For the moment, the story is very strong. The revenues are there, the earnings are there. You know the story, first quarter 25%, strongest earnings since 5 years ago. And the people like my Binky Chada is now on the conservative side when he comes with his 8,000. My famous boats, the empty boats, empty buses, positioning is just not there. Of course, some people have it, retail certainly has it, but for professionals, different sentiment positioning surveys, you look at it, maybe 50%, maybe 60%. So as long as these earnings continue to come in, we have room to go. Now, the three famous IPOs, some players believe that a lot of room will be spared for that one. So afterward, there may be a bit of a correction. But already we're up at 7,600, so you will find many people willing to buy the dip. Two things may be a threat. One, if we go back to maybe like 7 days ago, 8 days ago mood, rates, if they revisit flirting with US 10-year 475, if the whole talk of 5% US 10-year comes back, mainly because of inflation expectations, because so far the sell-off has been mainly led by real yields. Inflation expectations have been stable. I know it's a big data week, ending with NFP on Friday, but possibly June 10 next week the CPI is even bigger. If that's like a 0.1, even 0.2 beat, then 2022 narrative will get stronger. And of course, Iran, Hormuz, at the moment the holding pattern. Will we get a deal? If people come offside and we get a big escalation, that's not gonna help the risk story. That's not gonna help the AI story. That's not gonna help the rate story.
Mm.
So, what's your view then of how the bond prices currently are reflecting the concerns over the Middle East? Is this a wait and see phase still, or are some of those inflation fears being crystallized for investors?
Steven, my gut feel is that it will be both equities and bonds. It will be like 2025 post-April. What do I mean by that? Coincidence, but April 9, 2025 was the dip in equities after President Trump found the bond market yippee and started taking steps back on tariffs. We never looked back. We had some corrections, but that was a dip. And this time around, April 9 was when the US administration said the first 2 weeks of true ceasefire, etc. And on the bond side, 468 US 10-year we traded last week. Again, maybe by chance, towards the end of May, right before EuroLeague basketball Final Four, 464 last year we traded. And then summer, some concerning non-farm payroll figures, inflation coming in line, we come down. That's my gut feel. The big risk to that, again I underline, even more than NFP, is June 10. If that's a beat, understandably, more and more sell side and buy side will push for a revisit of 468 US 10-year, if not higher, related to oil as well. Key pulse for you and Lizzy, especially through 7 days ago when I did my roundtables, but 7 days doesn't change much. Fast money, multi-asset, pods are overwhelmingly paid rates and long dollars. Long dollars a bit more intellectual. Certainly they shied away from soft dollar, but paid rates is not just intellectual, it's positioning. So many people fear inflation expectations. Many people fear we may revisit the highs in yields. That's why a lot of people are on the same side of the boat. So receivers and softening of rates, we're vulnerable to that.
Let me just ask you about gilt yields, because we saw a drop on the UK economic data, but they had been up on the political uncertainty. Are investors just kind of waiting to see the result of the by-election for Andy Burnham on June the 18th?
I should ask you about the UK because you're covering it wonderfully, but certainly UK and Japan, these are the quote-unquote bad students of the bond market. Since last summer, actually, a lot of people were expecting, so-called fiscal dominance, Trust 2.0 moment, led by UK, led by Japan. Even in Japan, we calmed down, but you asked about UK. Yes, we did calm down. In the last 2 weeks or so, almost 40-45 basis points of a rally in gilts.
But are they going back up again?
that election is key. That election is key. So far, like the moment that he's nodding towards the fiscal rules, is a positive. UK overall, our island needs foreign market teams' help. So if back to Iran and Hormuz, escalation wouldn't help. Oil going to higher to 120, 130 wouldn't help. After June 10, bond markets getting in US as well, EP wouldn't help. But my gut feel is yes, it will be a calmer summer for UK gilts as well, and that doesn't really help this paid rate consensus worldwide.